Okay, what's up, people? So, to start off, good morning. I hope y'all guys had a great week. Um, Christmas is coming up, so I hope all of y'all have a wonderful holiday with y'all's family and nothing but blessings. Let's do a little recap on the week to start off. Let's start off on the 15-minute. That's typically where I like to be when I am looking for movement. So, Sunday, we opened right here. Did we have a new week opening gap? No, we did not. Well, let's see. We did. Market closed here. We opened here just to make sure. 473. Yeah, we opened there. So this was our new week opening gap. There's the man. So that was the new week opening gap for us on the week. You're good, brother. So Sunday night, oh, should set it to 15-minute. Help. Sunday we came down into this bullish order block, respecting it, pushing back up to the upside, and Friday's high was all the way up here. I don't think we took that all week. No. Friday's high is up here. Really, it's up here. So we have a little bit further to go if we're going to take Friday's high. Monday, though, we swept Friday's low. So typically on a Monday, we sweep Friday's high or we sweep Friday's low. That is the usual case. So Monday opened up, we swept Friday's low. After we came up into this fair value gap that's right here. The other thing that did occur was we tapped into this previous low, bouncing price to the upside, which is what allowed us to continue to push further down. So we came up, taking buy side liquidity through here. Now that we took buy side, that allowed us to push down. What you could have used in this situation, and I think it's on the 1 hour that it was better when it went through at one-on-one yesterday. Yeah, it was. On the 1 hour, we had this bearish 1 hour fair value gap, which we used to play to the downside. Stayed under 50% of it. We pushed down from there. Let's go back to the 15. So Friday at the end of the day, we took sell side, which is what allowed us to come up, take buy side. On Monday, which we took some buy side liquidity, this high in particular, bounced out price, allowed us to push down, take sell side. Now I know the market was reaching for some further lows to the downside. We came all the way down through here. Yeah, we tapped into this fair value gap that's right here. Dang it, I went back to the 1 minute. So let's continue forward. We took sell side liquidity. I mean, and overall, we pushed low for a majority of the week up until the last basically 2 days. Um, I went over this with Mike and E, and that's what that new lessons video is about. When we got into this area right here, I longed in this area due to the fact that price was balanced below. We didn't need to come further down to take anything out. There is no more inefficiencies to the downside through here. I explained that in the video on how I found that. So if anyone hasn't watched it yet, go back and watch it. That way you will see why I was able to choose that area. Mainly because if you draw out all the fair value gaps on this 1 hour that haven't been touched yet, so like this one right here, this one's been touched because of this wick. This one right here has been touched because of this wick. Now there is a gap right here, but it was tapped off 50%, which when price taps off 50%, it's either going to close it fully or it's going to tap off 50%. It can tap off 50%, price can be considered balanced off of 50% tap, which is why sometimes when you see opening range gaps, you'll see the market touch 50% of it, and then that's all that it leaves. That's because it considers price balanced, and therefore it doesn't need to close it fully. Now I can come back for it later on, but that's usually due to there being liquidity on the other side of it that it's going for. But anyways, so there was no more inefficiencies on the 1 hour that had been tapped. This one had been tapped on the 15-minute time frame. If I were to draw this out, I broke it all the way down into the 1 minute, 2 minute time frame, showing that there weren't any inefficiencies there. So price was considered balanced from here forward. So that's why the market pushed up through Thursday and Friday. It did not need to go further down. What I played into was these wicks that were right here on the 4 hour. Price stayed above 50%. It did get below 50% for a second, but then it got back above it. Oh, dude, my longs are for these, Riz. This is my target. You got equal highs here, 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 and here. So I am gunning for this. That's what I want to see the market take. Are you talking about the when you say price went for the whole gap, are you talking about that little gap that I was showing right here, Brennan? On the lower time frame? Yeah, it can price can be considered balanced off of that alone in itself. It doesn't have to close it fully. Um, and I'm sure well, no, you want to see at least a 50% touch. Price can be balanced off a 50% touch on a gap like that. Um, that's the main thing. I do want to check one thing. maybe it will let me check the whole entire thing. Let's do this real quick. So here is the low right here. They're touching. Well, there's your answer. Do you see that, Brennan? Okay. Wait, did you say yeah already? You posted at 11:25. So it didn't have to continue further down. Um, well, I'll wait for y'all to finish typing. Let's look at this on the 1 minute. I want to draw this out. Hopefully it lets me go back all that way. Cut it off right there. Okay, let's look at the 2 minute. Yeah, they touched. Okay, so there's that answer to that. So price didn't have to continue further down. I've lost my train of thought now. Anyways, so when price got in 50% of this area, that's why we had this consolidation for a period of time, which was then price was now considered balanced below, so it was able to push up. So we came down, we took sell side liquidity, we came up, pushed buy side, tapped into this bearish fair value gap on the 1 hour, tapping into this low with this high, bouncing price to the upside, which is what told us the market was going to continue further down. From there, we swept Friday's low, pushing back up into this fair value gap that's right here on the 15 minute. Coming down, taking more sell side. We push back up into that same fair value gap right here, which is what allows us to come down more, take further sell side liquidity. Friday we opened. On Friday, we were able to take all this sell side to the upside. We have yet to take Mondays or Fridays, which would be good for a further push up to take that, as well as take these highs that are up here in this area. This is just too pretty of a thing right now. You got literally all of that. Just resting there. Just like saying, like, please take me. So that's what I want to see. I still want to see that. It's just it's too clean of a setup. So that's what I'm hoping to see next into well, it may not happen with it being Christmas. We may see it December 30th with it being FOMC. Um that's what I believe. But so yeah, we came down, took sell side, pushing back up into this bearish fair value gap. We wiped out the rest of the lows, pushing all the way down to the left side. Price was considered balanced once it reached into this area because there were no more inefficiencies to the downside, which is what allowed us to push back up. Came back up, swept all this liquidity, had a really wild day on Thursday. Whole lot of bull crap. So that was an interesting day, to say the least. Now, what I could see coming into next week is what looks to me, honestly, is we have all of this through here that has yet to been taken, and that's really pretty to me as well. And if we're going to continue further up, some of this has to go. So, I mean, we have a few possibilities leading into the week. Do I think price is going to continue further down past here? No. But we could see price come up, and it could very much so take this high that's here going into Sunday night. We could have a pullback into this area, which then allows us to come up and take this liquidity to the upside. That's what I could see happening. I don't see the market just going and doing its little dance and just continuing to push up from here. It's going to have a pullback of some sort. That would make sense to me. Do I hope this happens? No. I would really I would really love just to see like something simple as in a pullback to like here and then coming up higher. Now, after it does that, I mean, we could see it come back for this. It's just that's just too gorgeous right there. Each low here, 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 here was not swept. So like that's a nice setup right there for something like this to happen. And then us to push more up. I don't want that to happen because I'm in longs. I just want to see it go up at this point. And it's going to. I'm not worried about that. We're just going to have a little bit of a little dance before we get there. So yeah, that's basically just a recap real quick of the week. I posted a photo in my lessons of the last 5 weeks, doing a recap of each week for the last 5 weeks. So that's why I didn't go too much in depth onto this, drawing out every single fair value gap, order block, and all that stuff. I don't need to really do that for you guys because I mean y'all can see that yourselves if you just look at a chart. So I don't need to freaking overdo it in that. But I know there was some things that we were going to go over today that were asked. So silver bullet strategy. Silver bullet strategy is pretty simple. And macro times. Macro times are always the last 10 minutes of every hour to the first 10 minutes of every hour. So you're looking at 9:50 to 10:10, 10:50 to 11:10, 11:50 to 12:10, 12:50 to 1:10. It's the very last 10 minutes and the first 10 minutes of each hour. That is a macro. That is a time in ICT um, that the market will typically make a move for liquidity. Whether it be buy side or sell side, you have to determine that based off what the chart's showing you. But those are the times that the market will do that. Um, and you can go and back test it, look into it for the people who do it. Um, that's why my favorite time to trade is 9:45 and 10 a.m. That is typically when you really actually see the true move of the day. Uh, my phone is frozen, so I don't know why. I need to get a new phone. Um, iPhone 13. It's way out of date. Emma gives me so much crap for it too. Um, now let me pull up Silver Bullet for you guys. Silver Bullet are set times as well that it will hunt for liquidity. Your times for that are 10 a.m. to 11 a.m., 2 p.m. to 3 p.m., and 3 a.m. to 4 a.m. Now, let me type that in. Silver Bullet times are 10 a.m. to 11 a.m., 2 p.m. to 3 p.m., 3 a.m. to 4 a.m. If you're gonna trade Silver Bullet, um, 3 a.m. to 4 a.m. Your is gonna be the best one to trade, and I'll show you here in 1 second. Um, I just posted that information for you, Raja. Silver bullet times are 10 a.m. to 11, 2 to 3, 3 to 4. The macros are the last 10 minutes of every hour leading into the first 10 minutes of every hour. Yeah, 10 a.m. opens a new 4-hour candle. It's also, yep. Yes, sir. Then you have turtle soup, you have the unicorn strategy, you got all kinds of different strategies in ICT, but I don't really get into those. I just try to keep it simple. I figure out what the market wants to do that day, and I just simply take that trade when I see that it's going for it. I don't care to do the unicorn, I don't care to do the silver bullet, I don't care to do the turtle soup. And I probably do it without realizing it. Do it. Do. Um Emma, you'll get that joke 'cause you said the same thing last night. Um, but oh, that made me chuckle. Um, but I just simply trade off fair value gaps, order blocks, and I set my target for the day. And when I see that the market's going for it, I just look for my entrance from there. I don't want to overcomplicate it and make it more unnecessary than it needs to be. When we complicate it by adding in things, YouTubing videos to learn new things. You watch YouTube videos of 10 different people who all say this is an order block. No, that's an order block. No, this is an order block. And I'm not going to do that crap. I'm going to learn from ICT and do what ICT says, and what my mentor says, because my mentor learned from him. And it's played out. But I just keep it simple, you guys. I mean, but if you try Total Soup, if you try Unicorn, if you try Silver Bullet, and it works for you, then do it. I'm not gonna sit here and be like, no. It's still ICT. I just don't want to have to overcomplicate it and say, okay, this is the only thing I'm gonna do. Because if a turtle soup is you catch the bottoms and tops, which takes a little while to learn how to do. Um, but I don't care for all of that. Brandon, you want to get kicked from this channel? Brennan's just asking for it right now. Oh. I thought you were being trying to be a little dick, calling it support and resistance. You know I'd never do that to you, bro. Catch me outside. Just make money and ignore noise. I love it. I love it, Rid. You do a damn good job, Riz. Um, so that's really what it is. I mean, it's just set times in the market that the market is going to hunt down liquidity. And if we go and we look back at stuff, um, go to the 1 minute for this. Hopefully it's not too difficult. You got 3 a.m. to 4 a.m. right there. From here, 08 to 70. It's a $70 move right there. You got right here, 3 a.m. to 4 a.m. Keep going. Now this one continued a little bit past 4 a.m., but there's the move. We keep going back. You got 3 a.m., 4 a.m. Now it's not always some ginormous gargantuan move, but you still see it made a move from up to down through here, and that was 993 to that was a $50 move right there. Nice little scalp. Nothing crazy, but you see it took buy side and then sell side immediately through there. You can keep going back more. There you go. Buy side to sell side. Another little like $50 move. We can keep going back. There's a nice drop through there. Nice little drop through there. Three a.m. hits here. We drop it to there. So from here down, 3 a.m. hits, we drop down, and then we spike back up before 4 a.m. It looks like. Yeah, it made two moves. Doom, doom. Come down more. 3 a.m. hits here. 4 a.m. hits there. Huge push up. Go back more. 3 a.m. hits here. 4 o'clock. Have this push up. That's as far as they'll let me go back. But you can see, Raja, Silver Bullet's pretty solid, especially if you're going to trade the 3 a.m. to 4 a.m. It's pretty great. So if you're up at that time or have an overnight job or something like that to where you trade, well, the thing is, man, the market does certain things at certain times. We don't have to sit on the chart all day and try to catch each move. You can literally set up a window, a time window in your day, and you can hop on for an hour. You can hop on for 20, 30 minutes each day, wait for your setup to take place, whether it's a macro or a silver bullet. You take that one or two trades and you're done within 30 minutes to an hour. And you can do that every single day. You don't have to sit on the chart. You don't have to take every opportunity given to you. You can say, okay, I work 11 o'clock at night to 7 o'clock in the morning. I'm a security officer. Let's go with that. I can hop on at 3 a.m., take one trade from 3 a.m. to 4 a.m. because I know that's when the market will make a move, as I just showed you guys. You catch that one move, make 300, 500, $1,000, and then you're done. You're not sitting on the chart all night. You're not looking for anything because the market is going to do specific things at exactly certain times. That's ICT to the T. It's algorithmic. If you believe in ICT, if you trade ICT, you trade it knowing that it's algorithmic and you see it continuously. So you can hop on each day at 9:30, take a trade at 9:45 or 10 a.m., and then get the fuck off the computer, go touch some grass, and enjoy a nap. And then go enjoy the rest of your day. Eat some food. Be merry. Be happy. You've never heard that? Go outside and touch some grass? Exactly. Even if you lose half that, that's 1,500. Yeah, stay inside. Yeah, you are in IT, so that makes sense. Let's see, November 18th. Let's pull this back, shall we? Let me get rid of that. If y'all do want this splits up the days for you guys. That way you can see each day split up. It's called New Day Divider. That's the only thing you see on my chart. That's the only indicator I use. But it will help you out a lot when you're trying to backtrack, test, whatever it is, um, analyze and all that. So I'm gonna have to go into November 18th. Yeah, I got to go to replay mode if I'm gonna look at that. Um, I actually knew someone, Raja, that he any trade he took would always go against him the other way. So whenever he wanted to short, he longed. Whenever he wanted to long, he shorted. It worked out for him for a little while, but then he stopped doing it because then he started to get better. He says yes, and when I do that, it goes against me as well. Well, we need to figure out where your analyzation is then, and which I'll gladly help you with that. So this is November 14th, November 18th, and Q1. Are you talking this right here, B? I just want to make sure I'm on the right day. I know it's November 18th, and I know it says 3 a.m., but I just am double checking. All right, cool. Okay, so we got buy side liquidity up here, resting in this area. You got some as well right here and right here. 45 to 90. It's a $45, $20. Market came up. It hadn't really swept any of this yet from the initial down move. So I mean, you do have a good bit of external liquidity to the upside. So 3 a.m. Look at that big old candle right at 3. She It went wee. Uh, um, and so 3 a.m. Let's mark out 4 a.m. And it did it before 4. He uses Trade Evade, but he draws out. Sorry, sorry to speak for you, Riz. I'm just instead of you having to type, I can make your life easier. I can just say it. He draws everything on Trading View, and then he trades on Trade Evade. Okay, so B, we took sell side liquidity that was right here. We went lower. Um, and so from there we had to push up. Now we came up and we took buy side liquidity that was resting right through here. So that's your first sign that the market has a possibility on reversing. Now what it did from there is it then used this inversion right here to then push higher. You see it tapped off 50% of it, continued up more. Now, following that, we had a slight pullback um, off of. Ooh, I like that. Oh, this is beautiful. This would be such a good trade. We had this initial pullback into this bearish fair value gap that was right here, and the market failed to close through it. Um, nope, that's not a bearish fair value gap. I'm sorry. That is a bearish order block. And the market failed to close through it. So we had this pushback down into the to grab some internal liquidity. Now, if I drop to the 5 minute, I want to see what this looks like on the 5. Wait, your screen? What? It's zoomed in. How zoomed in is it? It doesn't look zoomed in. You may have your thing zoomed in or something. So we've came up and we failed to close through this bearish this bearish order block. Um, and so we came back to take some internal liquidity. Now, what the market pulled back for in this situation, so we came back right here. Um, it used this 5 minute bullish order block. I mean, bullish inversion to push higher. And this is why we always got to be checking each time frame. When we're looking for an entrance into a trade, always be bouncing back around in between different time frames, the 1, the 5, the 15. Look for things that the market could be going for. Um, so from there, we came back and we tapped into that 5 minute bearish. I'll get this right, promise. We tapped into that 5 minute bullish inversion. And then that's what allowed us to push higher because you can see we touched it perfectly. And there's a solid entrance right there. Now, you could have entered here to target this liquidity since you don't know how far it could take it. But you could always just trail too. Um, for me, and this is something that you have to train your eyes to see. I would be targeting. You can target this as your first partial. Um, but do y'all see this low that's right here? Well, let's look to the left. The market came up and basically tapped off of it and then started getting weaker. So that was showing that price was balanced to the upside and that it wasn't going to continue further up. Um, and I'm sure if we went to the 5 minute, and that's something that you're not going to spot right away until you get used to it. Um, but now that I see that, it makes sense. So, yeah, what I would be paying attention to in this situation, this one, the 1 minute. Now, so yeah, you could target these upper portions right here. If you saw this though to the left, then you would want to start seeing how the market respond. Like if you were hoping that it comes up to here, this would be a crucial area for you to pay attention to decide whether you get in or get out of the trade. Um, but your partials could have been up here too, not just through here. You just want to make sure that you were paying attention to how it responds off of this low. Because as you can see, it responded and then went back down. Because it showed that price was balanced to the upside. Um, Now 3 o'clock hit right here on this candle. So that would have been a perfect entry because we pushed up, took buy side liquidity, pushed up and came back down. So we failed to take sell side right here. We took sell side here, pushed back up, failed to take sell side right here, respecting this bullish order block. We pushed higher, taking more sell side liquidity through here. Came back down into this bullish inversion that we now have, pushing higher up. We came back down again, rejecting this now bullish inversion 5-minute fair value gap, which is another sign right here that we're going to push higher because buy side liquidity, more buy side liquidity, more buy side liquidity, can't push back down, come back up, more buy side liquidity. Um, it's not always just like if you're watching the market and you see something like this where this high did not take this high, don't immediately assume quite yet that the market's reversing. Because we just took the previous high that was right here because we had this push up, pullback, push up, pullback, push up. And each time we took liquidity as we pushed up. So what would tell you that the market is possibly reversing is if we came down and closed past this and then used it to play to the downside because we have buy side, pullback, buy side, pullback, buy side, pullback, buy side, pullback, buy side each time. Now, if the market was going to reverse, you would see it go up, pull back, up, pull back, up, pull back into taking this low, then use that low to push further down. You wouldn't immediately want to short. You would not want to short until you saw it use a previous low to then push lower. So we'd want to see it sweep this low and then use that to push lower. That's confirmation right there that the market is going back down. But we didn't see it take that low. We saw it respect this inversion and use it to push higher. So it was just a slight pullback. We had already taken buy side here, here, here by getting up to here. Just because we didn't take this does not mean we're reversing. We're just we went for external, had to pull back for internal so that we could take more external. 3 o'clock hit, silver bullet time, and we're in a bullish uptrend. That's a perfect sign for you to long and take that trade. There should be no doubt in your mind. You see this right here, that's gorgeous. We're not making lower lows, we're making higher highs every time. So you could hop in here, you could target right this, and you'd be out in 5 minutes, maybe 10 minutes probably. 6 minutes, that'd be a 6-minute trade. Now, the best part about this was what I was gonna, that's why I said when I saw that, I was like, I love it. Because it then used that as support to push higher. But what I want to check real quick, let's see what the 5-minute looks like, because I'm wondering if it turned it into a breaker block. Sam joined. Um, now let's check the 15. So there's no breaker block there, but there is a breaker block right here. This one. And the market used it, ran through it, and then used it to push to the upside. So we can come back to the 1 minute. We can look at it. And notice how it tapped 50% and then used it to push up. So that's a great opportunity for a silver bullet. And you would have caught that from at least 940 to, even if you took it from 940 to 20, that's a $70. You caught this trade? You trade at 3 a.m.? Oh, hell yeah. Well, heck yeah. Australia. Fucking awesome. I love it. Um, that's a solid setup right there. Because we pushed back, respected this inversion, pushed higher, took buy side, had a slight pullback into this bullish breaker to then push higher as well. And it's beautiful. And the nice part is we had a close past that high. We didn't have a wick past that high. So that's a good sign for a continuation, even though we had that slight pullback. Um, so that'd be a good setup, a good trade for if you took that silver bullet on that day. Did that help you? You do need to study breaker and order blocks more. They're very, 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 very helpful. Um, and to like give you an example, let me show you something because I posted it in the channel. May have been earlier in the week. I forget what day. Let me exit replay mode. Where did the market go? There we are. Pretty sure it was this day. Nope, because that's 2:45 in the morning. Definitely was not that day. It was this day. I don't know if you saw it, but you want to pay attention to stuff like this because you see how it's stair stepping as it goes up. Well, look at the highs here, and let's draw this out. Now it's not perfect every time. The market's not going to just tap off the high perfectly and can use it to push higher, but you see how for a majority of it, the market pushes up, comes back down, bounces off the high, pushes up, comes back down, bounces off the high, push back up, pushes up, comes back down, bounces off the high, pushes back up, comes back down, bounces off the previous high, push back up, comes back down, bounces off the previous high, pushes back up, and it just kept doing that. Oh, Mike, don't you start trolling me, bro. Um, but that's showing you that the market is balanced. and it doesn't have a reason to push further down. That's why I posted this photo earlier in the week asking you guys what you saw, because that's telling you that the market is previously, yeah, it's telling you that it's balanced and doesn't need to push lower. It's freaking gorgeous. That's something I would love to trade. That's a lot of chop, but seeing that, that's what would keep me in a trade. I just continuously see it bounce off the previous high, push up, come back down, bounce off the previous high, push up, come back down, bounce off the previous high, push up, and repeat. That's fine. I'm cool with that. Now, if I see it come up, push back down, close past the previous low, well, then, I'm probably about to hop on out of that trade. Breaker blocks, though, are very important because they will tell you when price is balanced. It almost works like how I showed y'all with wicks, um, in that manner. When I'm looking to see what the market's going to do off of a previous wick, when it's going up or going down, because you'll see history repeat itself all the time, especially with this stuff. You got this one right here, balance in price. Doesn't need to push lower. You got this one right here. Now, it looks different because this is the 1 hour. You go to the 4 hour, though, and that's freaking gorgeous. It stayed above 50%. You look here, price balanced off of here. It did it again right here before going down. I mean, I'm sure I could keep finding them if I want to. There. And it's telling you, okay, market comes up, pushes back down. Now, you would see it this differently on a smaller time frame, but there's a high right there before the market pushed back down before pushing up further, and the market bounced off that previous high. This is this it's a rebalance. It's not really like a it is a confluence. It's a rebalance in price. When you see something like this is telling you the market just did a rebalance. It works the same way as if you use breaker blocks, if you use those. But when you see the market come up and when you see it a high that's made tap off a previous low, that's a rebalance in price, telling you price to the upside is balanced and it doesn't need to go higher, that it's going to go lower. I love it. See, so it did a rebalance right here. This high tapped into this previous low, showing that it's bounced to the upside. And I'm sure if I drop down to the 15-minute, it may not be the 15, it might be the 1 minute that I may have to do it on. Yep, that's exactly what it was. Uh, yeah, I use that as entries. I'm in longs right now, from 968, and I got in longs at 24 968 that I'm waiting for it to hit. So we have this right here. This is a breaker. It's a black candle. It took a low. It took this low. It took all this liquidity. Just because it didn't take this low doesn't mean it's not a breaker. But it took a low, came up, took a high. So what do we do from there? We're going to draw this over. So this is a breaker. Now for a breaker block, in order for it to work, the market has to, for a bearish breaker, the market has to pass through it and then come back up and use it to push down further. For a bullish breaker, the market will push up through it, come back down, and use it to push up higher. But that right there is a bearish breaker, and that tells you that the market's balanced to the upside, does not need to go higher, and therefore it's about to push lower. When you see situations like that, you want to look for your entrance. Where is the button? There it is. Oh, why is it in the middle? Sorry, y'all. I don't think that's saved. There we go. So, but on a higher time frame, if it's so that you don't have to go and like find the exact candle and make sure that it's a bearish breaker and it's the color black or red or whatever color you use. You can literally just go look at the wick, draw the wick out on a fib and use that. It tapped into it, price balance, doesn't need to go higher. Gorgeous. You see this here, previous high. Market used it, pushed up more. Previous high. Market tapped 50%, pushed up higher. that's what that's what Mike was saying. Mike said yesterday, and B said they feel like a superhuman when I'm doing my one-on-ones with them. But Samet, for the trade that I'm in right now, um, I used this wick right here, and I don't know if you trade ICT. I think you said you do. Uh, ICT teaches this stuff in his videos. Um, but it got back above 50% of this wick right here, and so I used that and I
Pudding.
longed at
What?
968.
Are you
Hey
eating
Brennan, your
too?
headset's on.
You eat all your chicken nuggets yet? Keep eating, buddy. Your belly was hungry. What?
You better eat all of his
Yeah,
chicken
buddy.
nuggets.
You said your belly was hungry.
Yeah, where's our chicken nuggets, Brennan?
Go on.
He doesn't even know. There we go. Or not. Hey Brennan, you better bring us some chicken nuggets too.
Oh, my mic came undone.
Yeah.
I'm outside changing or putting a spare tire away while listening, so sorry about that.
You're good. My TP, Samet, are these highs that I was showing everyone here. Oh, that's not the right one I wanted to use. Here, here, and all through here. There's so much liquidity just running through here. Isn't it? It's so clean. It's just too beautiful to me. And I don't think the markets, I believe we could see a pullback slightly. Um, what I was telling them was I could see a pullback, but I've gone into every time frame possible. So like you see this fair value gap, it's been tapped into, so that's no longer an inefficiency. You drop down to the 1 hour, look to the left, and this fair value gap's been tapped into, so it's not an inefficiency. You draw this one out. This fair value gap hasn't been touched yet. This has been closed over 50%, and this low touched with this high, so this is balanced. There's no more fair value gaps on the 1 hour, so you drop down to the 15-minute time frame. Check through here, and I'm sorry, I'm just running through this really quickly, so I'm speaking kind of fast. So there's no fair value gap through here. This is a 1 hour fair value gap, but there's no fair value gap through here on the 15. So this is not an inefficiency that the market needs to come back for. From there, you can look at the 15-minute. We see a 15-minute fair value gap here. We see a 15-minute fair value gap that's super tiny, but it's still there right here. We see a 15-minute fair value gap. I think there's one more here as well. And then we see another 15-minute fair value gap here as well. So then we drop down to the 5-minute. Let's check the 5-minute, see if any of them have been touched already. So this one's been touched, so this is no longer inefficiency. This one's been touched, so this is no longer inefficiency. This one's been touched, so there's no longer inefficiency. There is still a 5-minute fair value gap on this one, so let's draw it out here. And then there's another one as well right here. That was combined, bring the two together. So now let's drop down to the 2-minute because it's not going to let me go all the way to the 1-minute and go back that far in my history. I already tried that yesterday. So as you can see here on the two that I just drew, there's no fair value gap here. So this is good. And this one is good as well. Now, if we look at this one that's right here, it's not going to let me. Wait a second. Go back to the 5. Draw that back out. Right there. 2-minute. Yeah, so there's no fair value gap right here. So everything's been covered to the downside. So the market has no reason to go further down. Yeah, the matter, it's highs and lows can be played can go back. I think it's like 2 years. They can still be used um for liquidity. I think it's 2 years. I'm pretty sure it's 2 years. It doesn't matter. It doesn't really matter. It's the market's moving up and down to take liquidity off of previous highs and lows. It doesn't matter if it's a few days old or a few months old. But yeah, so the market has no reason to push further down. Now, if the market wants to come back down before I see it going higher, what I could believe would happen is we have all of this liquidity that is resting through right here. And I believe the market could come up, take this high right here. It could come back from there and it could push down, sweeping this, and then it's going to push up from there. Now that's what is a possibility. I'd prefer it not push back that far, but it easily could because none of these lows through here have been taken yet. And so that's a lot of sell side liquidity that the market could see. Now we could just have a very slight pullback here and then go up as well. That's what I would prefer. That's what I'd really like to see happen. And that's what I believe will happen. But the market's got to go down in order to go up. Since we've been taking all this buy side liquidity that's been resting through here, it could very much push back to wipe all this in order to push higher. And so that's my thoughts. coming into next week. I don't think too much will happen next week with it being Christmas. But I believe going into the following week, we have FOMC that week. And so I think that's when it's going to happen. Riz, there's a fib right there, bro. Y'all be best friends. Oh yeah, no, it's beautiful right now. Um, everything's just gorgeous. It's too pretty of a setup. I think we could push back slightly, either wipe this or just take a little bit here and push higher. I don't see us just going to the moon from here. We got to take some form of sell side before we can go up. But those are just my thoughts. It would make more sense to me to see this get taken. That's just asking for it. Like that's just too clean. Um, but we will see what happens from here. It actually finished the day, I believe. It closed that order block perfectly. Just past it. So I mean, it could push up, then use it for support. Oh my lord. You see what you freaking did to me, freaking Mike and Brennan? Now I just called that support. Oh my gosh. It could push up, come back down, and use it to push higher. But that's what I could see happening. What gift did he just use? Oh man, I didn't need to see that. Why you gotta be posting? And it's just on replay mode too. I gotta scroll up so I don't have to look at that. You freaking dog. Um, but yeah, those are my thoughts on the. Yep, that's how I feel. He deleted it. Okay, so let's see what else there is that y'all had questions on. Um, that's the only two things I was asked about. Okay. What else does anyone got other questions? Anything that they want to ask? Want to gain some knowledge on? Um, no. So how can I be cool like you? Thanks, Brennan. I don't. I can't. I don't. My swing trades happen on my own account. Um, and then my live accounts and my prop accounts are just day traded. When are you getting snow? I don't know, but it's getting down to the 20s here in Georgia, so it's not. It's gonna. I hope it snows. That'd be nice to be able to enjoy that. But Georgia always freaks out whenever it snows. Everything shuts down. Everyone panics and just goes into what the fuck do we do mode. And it's kind of funny and pitiful because it's just makes me chuckle. Georgia is just the state of panic. Any the weather changes or anything, they're just like they go and fill up their bed trucks with gasoline. They put a tarp in it and fill it up with gas and buy all the toilet paper. It's 12:24 p.m. Jeez. You up late, my guy. Oh my gosh. Okay, now I see why you trade 3 a.m. to 4 a.m. That makes a lot of sense. Because that's like, at least you're not trading the Asia session. The Asia session sucks. Asia is good for gold though. Gold still moves during the Asia session. Yeah, Georgia. Not the country. The state. No one else got other questions? Like I can just teach you breaker blocks real quick. I don't really. You're gonna see videos that teach you something different. Oh, breaker blocks. Um, I don't. People teach breaker blocks and order blocks differently. It's very frustrating. Um, yeah, it's they complicate it and they'll teach you something completely different. Um, I'd rather just go over it with you guys. So I'm going to type up something on here real quick and then screenshot it so you can save it. Bullish. 1 or 2 black candles followed by 2 or more green candles, usually at the bottom of lows. Bearish OB. 1 or 2 green candles followed by 2 or more black candles, usually at the top of highs. Proportion below a single black candle in the middle of an up move or a single green candle in the middle of a down move. Awesome. Awesome. And then let me type up the next part. Good. Up, someone left. Copy text. Who left? Oh well. Oh, it won't let me paste it. Oh, that's dumb. Okay, I'll just type it. On a single candle, the candle will be the one that takes the low before the next move takes a high. Must be a black candle. No, 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 no. Must be a green candle. Very strong on a single candle. The candle will be the one that takes the low before the next move takes a high. Must be a black candle. Yeah. and then bullish. Drawn on a single candle. The candle will be takes the low or takes the high before the next move takes a low. Must be a green candle. All right. Whoever wants to screenshot that, go ahead and do so. Or you can wait and I could actually go ahead and draw one. So you see the green candle right there? It took a high. Next move down took the low. So that is a breaker. Market came up, ran through it, came down, and then came up, ran through it, came back down, used it as support to push higher. Thank you, Riz. Now we have I don't think we're gonna be able to really. Oh, no, here you go. Let's look at the 5. It's not the best example. It is one though, because it did reject it initially. I'm just gonna put it like that. Yeah, that's not all. There isn't really one for the 1 minute. Wait a second. Well, I mean, yeah, but typically I want you guys to use just one candle. I don't want you to use multiple candles. But in this situation, this would be the one that you use. This actually, bearish. Took a low, took a high. Let's see if I can. And then it used it to play down. It didn't go far down because we were stuck in a whole bunch of BS, but here is an example from each one. So screenshot that, B, and whoever needs it, and save that information. So as you can see here, single black candle followed by 2 or more green candles. Market came back, used it to push higher. It even did it again right here on this one. Used it to push up more. Now this would be considered more of a proportion block because it's in the middle of a move. So this would be a bullish proportion block. It's a single black candle between a whole bunch of green candles. So you may need to take another screenshot. Wait, before you do it, now you can. Now you have everything in there. You have bearish breaker, you have a bullish breaker, you have a bullish proportion block, a bearish proportion block, all of it. So save that. So let's run through it real quick, okay? So this is a single down close black candle followed by two or more green candles. It is a bullish order block. This is a single black candle in between the run up. And I'm gonna post other photos of it too, other examples. We're gonna do a few examples. This is a bullish proportion block. Market came back, used it to push higher. Now let's get into bullish breaker. Like I was saying a little bit ago, breaker block for a bullish, drawn on a single candle. The candle will be the one that takes the high. This green candle took the high right here before the next move takes a low. It came back down, swept this internal liquidity before pushing higher. The market has to run through it like it did here. And then it came back down, used it, tapped into it to push higher. That's telling you price is balanced to the downside and doesn't need to push lower. Not at that moment. The market can still push lower. But what that's telling you right there in that moment is the market does not need to continue lower for more sell side at that time. That means it's going to push back up for more buy side. The market can still come back later on when it's achieved the buy side liquidity that it needs, so where now it needs to go back to balance out the other direction. It can still run back through it.
Hey,
There and
Chris,
at that,
sorry, can I quickly interrupt?
yes.
Okay, so since you mentioned the price does not need to come back from this bullish breaker, how would you identify this? Because we can clearly see there's a fair value gap just before where you had bullish proportion block. So this is exactly what my situation was yesterday when I was watching the market. I was assuming it's going to come back to these fair value gaps and I can go long, but that never happened. So I just want to stop you and ask you because I had this in my mind yesterday as well.
What fair value gap were you talking about? That's
I'm
just
talking
before
about
it.
just above bullish proportion block that you had it
This one?
below.
This one?
And yes, this one and the one below. There are two fair value gaps right here. This one
This is
and the one. Yes.
well, this one was tapped into right here, so it's no
Yeah,
longer an inefficiency.
yeah.
So market doesn't have to come back for it. Now, if we want to drop to a lower time frame to check the other ones, we can. There's no fair value gap through here on the 15-second. Market doesn't have to come back for it.
So the
This
lowest we
one,
can go is 15-second to identify.
well, I can
If
go lower, but there's no fair value gap here, so there's no point. This one's been tapped right here, so that it didn't need to come back for this one.
okay.
You want me to? I can.
So having said that, you're gonna keep going on a lower time frame to find out if it's been tapped or not, right?
Yeah.
Okay, okay. Thank you.
Yeah, no, you're good. Um, so yeah, the market had touched this one. It didn't need to go back it didn't need to go back for it. This one's been touched here, didn't need to go back. This one's been touched here, didn't need to go back. This one's been touched here, so the market didn't need to go back for it. We can check the one. Oop, I can make it smaller. Um, it's been touched. So yeah, everything like that. What do you mean, buddy?
Hey, Chris, when you were showing 15-second candles,
Yeah.
and during that time frame, if you look at the left side of the candles, those price gaps are closed. So there is no need to go down.
Where are you talking about specifically?
Go down to 15 seconds. You
I'm
know,
on it.
the fair value gaps you were showing.
Yeah.
Yeah, that's the area. If you see the green candle
This one?
on, no, move up the same line. Um, you know where you got the lines, a black candle, which is touching the top of a black candle. Now, you know the box which you have drawn.
There's so
Come
many.
back
Which
to
one?
uh,
Oh no,
come
no,
back.
Chris, the one above bullish proportion block, the one that you were just
Yeah,
explaining it to me.
go down,
Oh, this one.
go down. Yeah, this
Fine.
one. If you see,
Yeah.
yeah, if you see a black candle on the left where you started your box, yeah, that black candle, basically that is aligned with the green candle on the other side, on the right side. Yeah,
Oh, yeah. So you look at that, and you just pointed something out more to me. So that tells you again, once again, price is balanced below right there. This is a this is a breaker block. High, low taken. So there's another breaker block. Price balanced off of it and pushed
yeah,
higher.
there is no
So that's
gap for price to be filled. See,
yep.
so there is no reason to go down.
Yeah.
Maybe
So
with the naked eye, you might see there is a gap, but from the market perspective, there is no price gap.
yep. No, thank you for pointing that out. Did that help you, Raja?
Yes, Chris,
Raja?
Russ, thank you so much. I really appreciate. Yeah, you actually, I wasn't looking on the left side, but now it makes more sense. Thank you.
Yeah, of
Thank you,
course.
Chris.
Oh, hey, thank you, Riz, too. So that's the other thing though. So when you see in a situation like this, um, that it happened here as well, and then it happened again up here. When you see this though happen, that should tell you in itself that okay, things are balanced to the downside. That will save you time on having to go and check every possible fair value gap to make sure that all of them haven't been touched yet. Because when you see a breaker block like this get touched, then that's telling you prices bounce to the downside. It doesn't need to return down. It doesn't need to return down for sell side liquidity. It's going to continue to push up for more buy side. So in that situation, that's what that will tell you. So using breaker blocks can tell you, okay, price just did a rebalance, and it's showing me the fact that this low tapped off this high. That's telling you price is considered balanced to the downside. It does not need to return to the downside. It's going to continue to push up. And we had a bunch of bullcrap remaining through the day, but we did push up through the remainder of the day. Um, so no matter what FEG we mark out, we should be dropping down a lower time frame to make sure it's untapped. Later, Sam. Get some sleep, bro. Enjoy your night. Um, yeah, you're gonna want to when you draw something on a time frame, like B, are you targeting fair value gaps? Oh, um, so let's say you are in a trade and you see your setup happen and you're wanting to go long in this area. But your concern is could we possibly push down, right? Well, then you could check this fair value gap, see that it's been touched. You could check this one and see if it's been tapped on a lower time frame. But to save you time on having to do that, being able to identify breaker blocks will tell you ahead of time. So if you're wanting to go long in this area and you see this breaker block and you see the market tap off of it, respect it, and react in the way it did, that's telling you market does not need to push further down. Now, if you see the market close through it, then use it to push further down. Okay, well then, yeah. Now that means that there are some fair value gaps, some inefficiencies to the downside that the market is hunting down liquidity on. Um, and so that's why in this situation, this tells me price is bounced below. It doesn't need to return further down. But when I draw out a fair value gap, I'm drawing out the ones that I see the market responding off of too. So like, and when I'm drawing out an order block, I'm seeing price react in this area, pushing against it. Okay, what could be causing that? I see this order block here. I'm gonna draw it out. I'm gonna see how the market responds to it. Look for a possible entrance for shorts. If I see the market responding to this breaker block in the way it is, okay, cool. What did we just do? We're taking buy side, buy side, buy side, came down, swept some sell side, pushed back up, took a little bit more minor sell side. So if the market wants to push up, it's able to from here. But also the fact that there's a breaker block with this low tapping off of this high right here, that's telling me price is bounced to the downside. So I have a high probability trade of going long right here. Hopefully that made sense. So we can use this right here. You have a breaker on this black candle. Remember, Whoa, that got separated. Where'd it go? That's a rebalance in price right there. Candle took a high. Wait. Ooh. Bullish, drawn on a single candle. The candle will be the one that takes a high before the next move takes a low. What happened here? We took a high, came down, took a low. What candle is it? Right here. This is a bullish breaker. Now, what I said a second ago. There it is. That does not mean the market will not return for it. The market is hunting down buy side liquidity in order to then come, and then it can still come back and close back through it. But at that current moment in time, price is considered bounced below, and it doesn't need to push lower at that moment because it's still hunting more buy side liquidity. So you can still, that means you can expect market to continue to push higher to hunt down more buy side liquidity. So what happened here? We hadn't taken this little group of highs that we had right here. So the market came and took all of this and pushed up. That is a big fat red line. There we go. Now what happened from there? Let's look, let's see what we have right here going on, right? We have a single black candle. So what does that possibly mean? Drawn on a single candle, the candle will be the one that takes the low before the next move takes a high. Must be a black candle, remember? We took sell side liquidity. We came up, took buy side liquidity. So what do? Let's draw this out, shall we? Again, let's look at it one more time. It will be the black candle that takes the low before the next run takes a high and takes buy side. Now it doesn't mean we have to come up all the way here to take buy side liquidity, but we took all the buy side liquidity that was resting through this drop that happened right here. Plus we took the buy side that was right before the drop. Came down, black candle, came back up. The black candle is the one that took the low. Market came over now, tapped into it, stayed under 50% of it, and then used it to go lower. So you see what I'm talking about? So this came up close through it, used this breaker to push higher to take the remaining buy side liquidity that it needed, and then it balanced itself out immediately following that off of this breaker low in order to then push lower. And this was on that chop day. Does that make sense, y'all? Makes me happy to hear. Now let's look at some more stuff, okay? Now breaker blocks work wonderful on the 1 minute, okay? But they can help you out big time as well on higher time frames. Because remember what I've taught y'all. They typically rest at the top of a move and the bottom of a move for order blocks. So if we think in that aspect, well, what do we see in this situation? We have this single green candle right here, right? Now I know I've told y'all is it needs to follow by 2 or more candles, but don't forget we are on the higher time frame. So if I were to drop down to a lower time frame, we're going to see, well, if I do this, we got this single green candle right here, but what follows that? 2 or more black candles. So this qualifies it as an order block. What would happen here? We stayed under 50%. Market reopened lower. Is at the top of a move. What do we see right here? Single black candle, right? What's that tell you? It's an order block. Notice how the market played into it. Use it to push higher. It's at the bottom of the move. You can even look at this one. Black candle. And the market pushed up, came back, tapped into it once, twice, 3 times, pushed higher. What do we see in this situation? Green candle, right? Market tapped off of it. Came down, took sell side, pushed back up into it, touched it, used it to push lower. Top of a move. You can go so far as to use the 1 hour to see these things. Now again, remember, I know it's 1 candle, but if I drop to a smaller time frame, I promise you there's more than just 1 candle there. Another bearish order block. Another bearish one. Now, if you use 2 candles, it's okay. It's not going to matter to me. Your stop loss is going to be bigger. What do we have here? 2 green candles followed by 2 or more black candles. Market came back up, tapped into it, used it to push lower. Notice how these are all at the tops of moves. This is literally how you can catch tops and bottoms. Because you can sit here, wait for the market to pull back into this, because if the market's going to take that high, Well, then that means it's going to more than likely run for liquidity on the other side. If it's not going to take that high, then that means it has more liquidity to the downside that it needs to take. You have situations like how did I end up ordering that still correctly? Interesting. Like right now, y'all, look, we have a 1 hour order block right here. The market has not closed through yet. So you gotta be looking, be paying attention, waiting for these opportunities to arrive so you can take them. Now let's check the 15-minute for some bullish order blocks. What do we see here? We see one black candle followed by 2 or more green candles. So what do we have? A bullish order block. Here we go. Waiting for one. What do we see? Her. A single green candle. Freaking finally. This is a bearish proportion block in the middle of a down move. One single candle. What do we have here? Single black candle. Market used it to use that to push higher. What do we have right here? Single black candle. Market used it to push higher. Single black candle, push higher. That helps a lot more seeing these. Had these too small. So in this instance, what do we have here? We have a green candle, took a high, followed by sweeping and taking a low. What does that make this? A bullish breaker. If I can find the word. There it is. Market used that to push up more. We come here, single black candle, followed by 2 or more green candles. What did the market do? Used it to push higher. What do we have right here? Single black candle. Market used it to push up. What do we have up here? Green candle, followed by 2 or more black candles. Market used it to push lower. What do we got right here? Single black candle. Market used it to push higher. What was that noise?
That would be me. Hi, everybody.
Oh. What's up, Crimson?
Yeah,
What do we
life
have
as
here?
usual.
Yeah, what do we got here, y'all? We got another one. Bearish order block. Market used it to push lower. What do we have right here? We have a bullish order block. Market used it to push higher. Wow. Look at that. That's a situation where I'd be like, I don't know how I feel about that. But really, truthfully, you would have in this situation, you'd have this one that's right here, which the market used to push up. But notice how all of these are usually resting at the top or bottom.
Hey Chris, would you mind to check time frame? How much was the gap between the first bullish or bearish order block and then the second chance market gave? I think it was a 1 hour gap between each setup.
So you want me to check the 1 hour?
No, it's fine. You just look at a timestamp. Let's say one setup appears at 10 o'clock, and then the market goes back to the same bullish order block or bearish order block around
Here?
10:30 or 11:30, something like that. So I usually look into the patterns as well. Suppose I missed the entry, then I have to
Hmm.
wait. Okay, what would be the possibility exactly same setup will appear? So most likely it is around 1 hour window or half an hour window. So I usually keep eye on those patterns.
Yeah, so well, this is the next day. Um, in this
You look at the
situation,
same day
5:30,
one.
7:15, 11 a.m. So this was 2 hours, and then 4 hours later. Um, tapped here 1:30 a.m. Tapped here at 3:30 a.m. Hmm.
Yeah, mostly I see those setups around 10:30, 11:30 to 11:45, something like
Yeah.
that.
So we got a bearish breaker right here. Oop, wrong one. Click the same thing. Market used that to push lower to take the final sell side that it needed. Friday the October 31st. It won't let me go back that far if I drop lower. What is this making? Oh, Raja, what was your question?
Okay, I was just asking Chris because like everything that you mentioned right now, it looks really good, and especially like when you're teaching us, I want to make sure that we are also executing this in a live, live market when we are trading, because that's where I realize the problem is. But since we spoke last time, you said in January maybe you will give us like a day or two in a week where you would be trading live, and we can just quickly observe how you breaking down everything. We're not interrupting, we're not asking question during that time, because I'm sure you will be trading also. But that will really help us to spot everything quickly when these things are happening live in the market. And we can also see how you are breaking down between 1 hour, 15 hour, 5 minutes, 1 minute, 15 seconds. So that will give us like a live example of executing in the real time.
Mhm. So there's another bearish breaker for you guys. The black candle took the low, next run up took a high. Market came down, ran through it, came back up, used it to push lower. So when you sit there and you see this though, you're like, well, why did the market push lower in this area? Like that doesn't, there's nothing there. Well, there's your answer. Um, and then just like this one. Green candle took the high, market came down, took low. Market ran back up through it, used it to play to the upside. Black candle. Market ran through it, came back up, used it. That's not really the best one, but that is still one. But as you can see, the market ended up coming back up through it and going to the upside later on. You're good, bro. Worries. Ain't no worries about a thing. 'Cause every little thing gonna be alright. But hopefully that stuff makes sense for you guys. Y'all kind of picked up on it. It's stuff that just takes time and practice to learn. You're just gonna have to see it, but I mean, you can see how it plays out. Look, this high touches off this low, we get a reaction to the upside. This low touches off this high, we get a reaction to the downside. This high, before we had this initial drop, the market came back up, respected the order block, used it to push lower. Same thing here, came back, used it to push lower. Same thing here, came back, used it to push lower. Same thing here, came down, used it to push lower again. We got breaker blocks on the bottoms. I mean, order blocks on the bottoms. Market came back, used it to push higher. Came back, used it to push higher. Market came back up, tapped into this proportion block in the middle, used it to push lower. Market came up, down, back up, bounced off this previous high, used it to push higher, and so forth. Market came up, used this low to push lower. Market used this low to push lower. Nothing too complicated. Once you start to see it more often, it becomes easier for you to do. Let's see. Ain't no, dang, that's stuck in my head now. I want to have perfect photo for you guys. I just need one more. There we go.
I, I'm a little bit curious about these big moves. I think they happen usually within, the 10 minutes before the hour and 10 minutes after the hours. So I don't know if you zoom in, I can't see your screen, but looks like those are macro moves. All
Oh
these
yeah,
big
no, this
candles, black or green.
it started at 9:45 on this one. Yeet. Yeah, usually you'll see some pretty solid moves. This one happened at 9 a little bit at like this one started at 10, 9:45, 10 right here to the downside. So you can just like I said, 9:45, 10 a.m. is my favorite time to trade. You just got to be able to withhold yourself to wait. If you wait, I'd rather wait and miss a move and catch the main move than take a risky trade in the very beginning of the day, unless I know that the market's going to go for it. Because a lot of time the market will go ahead and start telling you that it's gonna make a move. Because right before open, you're gonna see a push up the other direction, take some buy side. That way it can just go ahead and dump right at the open. As you can see, right when 9:30 hit, market ripped up to buy side liquidity and then dumped following that. Right at 9:30. Ripped up, buy side taken, now the market can drop. It dropped all right. All the way down. It went wee. I think that was a $1,200 move day.
Yeah, sometimes it
24,400.
doesn't stop,
Yeah,
when
that was a
they
that's a
go up,
$1,200
they
day.
don't come down,
Yeah, sometimes you're just like, well, I missed it. Oh well. Um, let me. Do I have a proportion block anywhere? No. Bummer. Well, You don't get much use out of it in this situation. But that is one. Of course, you have a great day. I don't know if you want to try to grab a photo of this real quick. That way, I think this is probably the best example that I have for you guys on this stuff. I think I just found a bearish proportion, even though you don't get much use out of this one. But that is a single green candle right there in between a whole bunch of black ones. So there's an example of all of them. So all 6 things. You got your bearish breaker, your bullish breaker, your bearish order block, your bullish order block, and your proportion blocks. So if y'all want the best example I could draw for you guys, there you go. You got it. That all fits on one page. So I'm going to screenshot this myself and post it. But if y'all don't got anything else from me, I am going to cut it here, unless you got another question that I can answer for you guys. If not, I need to meet with my man, Initial Descendant. He been waiting on me. We were supposed to meet yesterday. Anyone got anything?
Well, not me. I've joined later, so I'll just rewatch what Mike is gonna send us. Thank you for
Mike
the
is
stream.
a OG on doing that for me. I'm in the midst of. Oh, that is not what. That is not the photo that I was supposed to post. He's getting me to start a YouTube channel for everyone. Next thing I know, I'm gonna have ICT in my DMs being like, "Yo, bro, fuck you doing?" Okay, well, guys, I want to go ahead and tell y'all Merry Christmas. I hope y'all have a phenomenal holiday with your family and loved ones. We aren't promised tomorrow, so enjoy every second you get with them. I thank you guys for being in this channel. I'm truly grateful for all of y'all. Y'all make my life better each and every day. I wouldn't be able to do this without you guys. So I thank y'all for entrusting me to be able to help you. To each and every one of you guys, I hope nothing but blessings upon you and your family. And y'all enjoy y'all's week, okay?